you can start these lawsuits, then it's going to start forcing the federal government to look at things in a different way.
Wow. Hey, everyone. Welcome to our Traded Black podcast. I am your host, Shad Dales. Today, we're talking cannabis. Hold on. Breathe. It's okay. I know there's not a lot of great stories out there, but there are still some great stories in this industry. If you want to learn more about the industry, how you feel, and leave a comment below. We'd love to hear you. But the most important thing here today is we want to talk about this podcast. As I said, there's some great stories that are being generated. We welcome back in the president and co-manager of the Pelorus Equity Group, Rob Sechrist, who, by the way, just reported their 57th consecutive month of at least 0.82% monthly internal rate of return, and it's in cannabis. Who would have thought? Rob, good to see you. How are things?
Oh, it's good. Thanks for having me.
Good. Ben, good to see you. How's the week been?
Week's been good. Just got back from Miami Beach on March break, and I wish I could be back there. But great place.
Well, we'll head back there next month. In the meantime, Rob, great to have you on. As you know, this industry, needless to say the least, is going through a very difficult time. That's really an understatement. A lot of talk about a lot of companies folding at some point this year, and insolvencies are increasing. Talks of even tier one MSOs might not even make it because, let's face it, these companies, they need capital. So being a debt lender, and here you are again providing another positive return for your investors, I'd like to know, how has your company changed during these times? And are you fielding a lot of calls right now from operators that need capital?
Yeah, so we're always getting loan inquiries and looking at refinances or new transactions. We're not getting as many as as the chatter is of distressed stuff that's hey, we got to figure something out. We're not getting that level of it's not like that's what we hear about. Now we do hear about those types of transactions, but generally if a transaction is failing, they can't come to us. There's nothing we could do for them. They would have to have somebody come in with new equity and reposition that company. And in that circumstance, we'd be willing to look at that and understand what they're doing, and that's what we do every day. So it's not. There are companies that are doing okay. There's companies that are doing well, and there's a lot of companies that are struggling, and it's for different reasons in different sectors in different parts of the country. But the cannabis sector, the industry, $27 billion each year is going to flow through. It's a matter of whether you can generate profits at the end of the day. It's going to be a lot tougher for a outdoor wholesale cultivator to generate profits this last year than it would be for a indoor cultivator that was able to control their market a little bit more accurately and have a perpetual harvest. But I will tell you, all those prices are on their way back up, and given the weather and the things that have happened here in California, I think that and people going out of business, I think that there will be ultimately an undersupply again here in the near term, and you're going to continue to see that. It's not that if there is a oversupply of the market and the prices go down, that's the permanent new basis. It's just that there's too much volatility in the supply and the demand that's causing that. And until that gets more stabilized over time, that you're going to continue to see that.
So before you get into it, Ben, I want to ask you this, Rob. What kind of questions are you fielding then right now?
From borrowers or from investors?
I guess it's a broad question, but more or less from borrowers right now.
Sorry, my Siri thought we were talking to. Just say the question again.
She said, I'm not sure about that, but I was referring more to borrowers. Thanks, Siri, for making me look sharp there. But anyways.
Yeah. So I'm on I manage the fund, and I'm not on the origination side to be as granular or to answer those questions. For you on the borrower side, I could speak more broadly on the fund side.
Okay, so when we talk about funds, what do you think are the most popular or most frequent questions that you get asked by a lot of investors month in and month out that are approaching you and contacting you?
It's number one is how can you be in the industry? Do you accept cash? And that's the number one
really?
Thing that people still misunderstand about the universe of retail investors that are just starting to enter into the space. They think that there is no banking at all, and that they don't realize that there's 684 banks out there, both federally chartered, state chartered, and community banks that are banking this industry, and it's robust, and it's about 15% of all banks out there are in the sector. So it's more robust than people realize. And of those 684, we're tracking over 4 dozen. We've heard it's as high as 400 are actively lending
400.
in one way or another.
People asking if you accept cash. That's still happening.
we don't accept cash. We never would. That would not be a good day when having some of our borrowers' payments are hundreds and hundreds of thousands of dollars. We would have a massive security.
Just when you think the industry's gone so far because you're in it, it's still got a long ways to go as far as people being up to speed and educated. But anyways, Ben, I know you wanted to ask a couple questions regarding to the February 2023 monthly report. So over to you.
Yeah, as Shad mentioned off the top, it's 57th consecutive month where you provided at least a 0.82% return, which, given the industry conditions, is pretty incredible. I would think most would acknowledge. So, what has been like? First of all, can you comment on this quarter? The internal rate of return rose 14 basis points to 1.12%, and just overall broadly speak about how you're able to consistently return month over month since inception when the cannabis industry is struggling so badly. Well,
I think it's a testament to our team's underwriting and being conservative of what they do. That yield is generated off of income. And so those yields, are from borrowers' payments that are being collected and being dispersed after we've taken all the expenses out and everything that is pushed through to the fund members. So, there may be transactions that, even if a borrower was to not make the payment, that is just blended through and reducing the cash yield. So, there has been transactions in our 5-year history that we've had. We've even had to foreclose on one, but that's all reflected in the report. And we have enormous equity protection in our transactions. So even if we were to have to foreclose and reposition an asset, we feel confident that we would be able to reposition that and make it a net positive trade over time. So, and in that, we're still able to maintain cash flow to our investors.
So just a follow-up question to that. Do you ever have people, I know it's, the equity markets are a completely different ballgame, but do you ever have people like question you and say, this is just like, how are you, just question how you're able to produce these amazing returns just on a month over month basis and almost not in a disbelieving way, even though it's all true? If that makes sense.
Well, I think that for an equity investor, it's different because they're looking at the share price is one metric, okay, and then they have the cash yield. We've decoupled the share price essentially because there's no volatility. We're privately held. And so now you're just looking at the cash yield on that investment. And so I don't think that when I first was presenting our opportunity to family offices and investors in 2014 through 2016, as we were getting ready to launch the fund, we got a lot of that there's no way you could ever achieve this. This is insane. But now those same people, there were some potential lead investors there that came back after the fact that wanted to be a lead investor, and we didn't need them anymore at that point, and they missed that opportunity.
Rob, one thing you've mentioned with us in the past is that your company banks with Needham Bank, and I bring this up because Needham Bank has insured all customer deposits for up to $1.5 billion, giving your banking assets complete protection. So this is a telling part of your story. So can you explain exactly how this works and how you were able to construct this accordingly?
Yeah, so Needham Bank has depositor insurance fund protection. I believe it's for our Massachusetts banks only, but it's a state insurance program, and I I believe it's all the way up to 1.5 billion of depositors' assets per bank, or at least for our bank. And so what that means that, anybody that's over the 250, the first 250,000 is insured by the FDIC. Above that, you're insured by the Depositors Insurance Fund. Don't quote me on these exact numbers, but if you go to their website, they say that, during the savings and loan crisis that, however many banks failed, that they were able to manage that no problem. And so they've been around for a long time, and it's not something that is just a fly-by-night feature or whatnot. And Needham Bank was a flight to safety bank during the Silicon Valley debacle that was happening. Boston, where Needham is at, is Silicon Valley's bank's second largest depositor hub. And so that was the regional bank that they were going to. And another counterpoint is that because of cannabis-related banks, we're required to have deposits there. We don't have other places that we can go. And generally, if your bank is a lender, or if you have a deposit relationship, you're required to keep a certain amount of deposit there or do your primary banking there. So by nature, cannabis-friendly banks are going to have what they call more sticky deposits. And those deposits, theoretically, don't have as easy or as large of a universe of other places to go. So those banks might, by default, become more important or more solid than other banks, potentially, is one way that we kind of think about it.
What do you mean by sticky deposits?
So that's a term in banking. So you're getting 10x leverage off of your deposits, and you are looking at the ratio of sticky deposits. Sticky deposits are the ones that are the kind of the base rate for the bank of how much deposits are staying on hand, as opposed to cash flow deposits.
So net is the fund, since you mentioned that there's insurance of up to $1.5 billion, and the fund has about $364 million under management. Can you say to fund investors that categorically that their money is protected, or is it not? Or is it too simplistic?
Yeah, no, I'm really glad you asked this question, because we had investors asking the same thing. And I had to clarify to them that we're not sitting on $365 million in cash in our bank. All that money is out working and secured in properties. So what we're only ensuring is the flow of cash flow that is being held in any account at any one time. Now, previously, those amounts had gotten to be very large, because we didn't have a place to get that to manage our treasury, which, putting it in T-bills while we're waiting to get that cash out the door. And that's just the nature of this particular business. Now, we did solve for that with Interactive Brokers, and we were able to clear all the enormous hurdles. We had to hire attorneys to get through that KYC. But now we do have the ability to do treasury management if we have larger balances that we want to get working. So it's one thing to be insured, but in addition to that, you want to have that cash working when you're sitting on large amounts of cash.
Is that the biggest misconception you find with your company? Is people think that you have $365 million in the bank versus, say, $365 million out working?
I wouldn't say it's the biggest misconception. It's just that there's some of our investors had that question. I'm like, all right, that money is like that's how we're generating the returns. Right. We wouldn't have any returns if it was sitting in the bank.
Yeah. We've discussed this in the past with you, but maybe a recap. When it comes to vetting, when it comes to lending, like a good opportunity versus one that you're going to pass on, what's the process involved in that?
Yeah, so I'm happy to maybe get you over to the origination team, to Dan or Travis, but basically, at a high level, what they're looking for is a very experienced operator. So we've de-risked that. We already know they can operate. Then we're looking for a sponsor that is either the personal guarantor or corporate guarantor that can support that transaction. And then lastly, the real estate. And it's not necessarily that that's a less important asset. It's the real estate is we're going to underwrite, and we're going to establish to what loan to cost ratio that we'll feel comfortable with that. And it's typically more than 60 to 65% from replacement cost value on our bridge lending product.
So looking over the numbers, on the February numbers, besides the internal rate of return, which is 1.12%, and that was all good. I noticed that the construction of the fund portfolio, that 80% of your lending had gone towards mixed use properties as opposed to just 14% for cultivation and 4% for retail. So I was curious to know whether
Sure.
that is by design or it just happened to work out that way. And how is that
No,
determined?
yeah, it's actually not that at all. Most of our portfolio touches
Hmm.
cultivation just by nature. And so when you see mixed use, that means that there's more than one license in that facility. And so most facilities have cultivation and at least processing. So that would be categorized. It's very rare that we have just a cultivation sole license there. So I would say that, it's generally our types of loans and our structures and what we're doing is primarily more focused on the indoor cultivation facilities and less focused on retail dispensaries. So that the banks are more able and willing to do the non-specialty use, basically related retail properties. There just wasn't much done to reposition that other than making it look nice. And the license that's required, it is technically specialty use, but only by license. Whereas opposed when you start moving all the way out to cultivation, indoor cultivation, it's very purpose built. And that's what we're experts at, is specialty use lending in that
Why do
sector.
banks lean more towards cultivation versus others?
They lean more towards retail because it's a very simple transaction. There's no construction portion to it. There's no specialty use to it. It's typically more in an urban area. The comps are more similar to what the property is going to be if it's cannabis or non-cannabis.
You talked about bank-friendly cannabis bank-friendly banks. Where do you see banks viewing the overall industry over the next couple of years? We've come a long way, but clearly Washington is at a standstill right now. But in the event this does get deschedulized, how do you think things change pertaining to how the whole banking system, or is there a big misconception about the banking system right now?
Well, I think that for banks, if the way that cannabis funds are, if it's taken off of the Controlled Substance Act and it's not considered an federally illegal use of source of funds, then I don't think that the banks care about on the depositor side. Okay, so for depositor relations, that becomes a non-issue, and anybody can bank them. Then they only are thinking about their reputational risk or moralistic stance for their other depositors. They might have a large foundation that's religious based that's not comfortable with that, and so that might be something that they consider. So I don't think that any cannabis depositor coming into, if this did happen and it was into a systemically important bank, I don't think that there's going to be any depositors leaving because of that, because you've deconflicted that federal illegality of it, and I don't think banks are in the business of disclosing who their depositors are. But for lending, it's not going to matter if the federal government changes look at how they look at the
Yeah.
funds. It's more now based on specialty use lending, and just banks aren't experts in that. Banks like things to be in a perfectly square box and everything match up perfectly for them to even have an idea of how to look at it. And no cannabis transaction is even close to being exactly the same for every single transaction. A retail dispensary is going to be the most similar, but even those are going to be different in each region.
Good stuff. Anything else you want to touch on, Ben?
Yeah, I'm kind of curious. Yeah, I'll throw this out there, but as you know, HHS Secretary Becerra is supposed to issue a ruling on the schedule of cannabis, and who knows when that's coming? Probably sometime before the 2024 election. Now, if he were to recommend descheduling and the DEA went along with it, and cannabis went to Schedule 3 or lower, would that force the Pelorus Group to take a look at their underwriting practices? Would that be a tectonic shift in your business model, or do you think very little would change?
That doesn't change. That's just how you categorize the cash. So that descheduling the cannabis. Sorry, I said that the wrong way. descheduling cannabis is not going to change the fact that the properties are specialty use. So that is not going to change. Okay. Sorry.
Even if they were descheduled, Rob, even if it was completely wiped off the map like alcohol in the unlikely event.
Yeah, but they're still specialty use purpose built for cannabis, and they're still going to need to be licensed. So that's never going to change regardless of what happens. And it's not like if you deconflict this or from state policy and federal policy, it's not like that's going to all of a sudden these lenders are going to come into the space. They don't understand the space. They don't do this type of lending. It's specialty use lending is very, very specialized. They're not going to be in that sector. But on that point, a state recommending that this is what we think is going to happen is like a freaking joke.
Yeah.
So it's just a PR. It's just a PR piece. What's more important is if the state allows for a compact or to sell to other states. That's way more important, in my opinion, because
but how realistic is that going to of happening?
I don't think it's that difficult because it's within their jurisdiction. So if California or Oregon or Washington or any of these states, I don't know which one's going to be first, allows for export across state lines to another state, that gives standing to sue. Now a business, a cannabis-related business in California can sue and bring that to the Supreme Court for interstate commerce clause. If it's illegal by the state laws to export, you have no standing to start the suit. So that's the way bigger crux here of what's going on.
Federal judge has already ruled that Maine, that the commerce clause that cannabis qualifies, right?
Well, yeah, I think that's a slightly different way, there's some, Jason Wild and I were talking about the other day, and there's some technical ways of how you look at that. But basically, I think that that if you can start these lawsuits, then it's going to start forcing the federal government to look at things in a different way.
Wow.
You're going to get some rulings that you might be able to rely on. And the court, again, is starting to make policy that the Congress should be doing.
Yeah. Wow. So this actually has some legs to stand on, these lawsuits then.
Yeah. It'll bring things all the way up. And I think it is Clarence Thomas has already had a favorable ruling. I think you guys have Jason coming on soon, but he'll get more granular on it. And I just can't retain all the vernacular and the talking points of it, but that's the general gist.
Good stuff. 57 months in a row. What a story. Congrats to you and your team. I got it asked, like the last thing I'll bring up to you is what's the consensus that's just the atmosphere around the company right now? And I guess the big takeaway that investors should know of moving forward as we head further into 2023.
Well, we're excited about Benzinga coming up, and we'll see you guys out there. Every time that somebody fails, that opens up additional opportunity for somebody else to succeed. Whether it's an existing party picking up that market share, or a brand new party with no debt and a clear balance sheet, and them having the opportunity to go there. So, look, this sector is an enormous sector. It's bigger than MLB and NFL combined. We've got an enormous sector with tailwinds of growth, and so I think that people need to realize, look, don't conflate just the cannabis equity stock values with the overall health of the sector. Yes, there's portions of the sector, the outdoor wholesale, California, they got obliterated, and that's a really sad situation that happened. But it's not like the $8 billion of cannabis sales is going to go away. It's just that guy's not going to be able to be the producer for it next year, or at least not with the same business that he had. He might have to start over or go work for somebody different.
Good way of looking at it. You learn something new every day in this industry. I did not realize that cannabis, the industry, is bigger than Major League Baseball and the NFL combined. That's correct?
Yeah, substantially now.
And a lot more fun.
And a lot more fun. And a lot more fun. We will see you next month in Miami. I appreciate you checking in. And again, congrats, and tell everybody at the Team Way say hi. And obviously a good educational piece for investors to look at your fund based on the returns. You don't hear this too often where you see positive returns in this day and age of cannabis, but it's great to see and great to hear us because we all know why we're here. We always feel like the best days of cannabis, if they ever can get rescheduling involved, bright days are ahead for the industry, which is why people are still here. But appreciate you checking in. Thanks, Rob.
Sounds good.
Take
Thanks.
care. Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.